Chris, here we are. We are back, rolling on the Elevate Cleveland podcast. Good to have you again here, sir.
Hey, man, I show up. It's a good time.
That's it. I love your sweater, by the way, or your top shirt. Can you actually put something in there? You could put something in there.
You could.
You can. You put your beer in there, huh?
Your beer.
Hold my beer. That's awesome. That's creative. Chris, do me a favor real quick. Just introduce our guest if you can.
Today we got Brian Coester. Brian, you're a jack of all trades.
Yep.
They say jack of all trades, master of none. They say.
That's right. That's right. Well, first and foremost, thank you for coming out. You took a nice little trip here. You're from Maryland, so all of our viewers have to know. He came on here. He flew here today, and he's driving back home today about 5 hours, right?
Yep, about 5 hours.
Yeah. A little bit more convenient for you to fly.
Slightly more convenient.
Than
Actually,
the
I like the fly in, drive out.
There you go.
The fly in, drive out.
You can leave when you want,
Yeah.
and then you're not
That's
worried
right.
about the flight out. But
That's right.
Sometimes
Awesome.
I'll fly in, fly out the same day too. Depending.
Awesome. Good deal.
You know.
So I think we figured it out that by the time this drops, it will be episode 7.
Yes.
So here we are. We're running episode 7. We have the wonderful opportunity to sit here with Brian Coester. Before we allow him the opportunity to introduce himself, who Brian is to us, again, Chris and I are licensed loan originators. Okay, our company's in 43 states. We partner with real estate companies all over the country, and Brian is one of the co-owners of Real Estate Connection. So when Chris and I, as licensed bankers for Liberty Home Mortgage, do not have a realtor connection in, let's say, Wyoming or California, right? We go to Brian, we send the pre-approved buyer there, and Brian helps connect us with the agent and the buyer with the agent to then form a relationship to be able to help out that buyer.
It's a
Pretty simple.
win-win scenario.
That's
Yep.
right. That's right. And, most buyers, to you guys' point, right? People are online. They need a real estate agent and they need a loan officer. And so, the speed in which you provide both, right? They don't want to go shopping to see both a loan officer and a real estate agent. So having both, the relationship with you guys has been great.
Awesome.
Yeah.
So absolutely.
Awesome.
So, Brian, why don't we just start with this? Just give us a little bit of an introduction. Who you are.
So it's funny because I always say I'm just Brian Coester. Nice to see all you guys. Right? I mean, that's really as far as nothing really stands out, as far as how I would introduce myself.
Sure.
Other than hi, nice to see you guys. And then,
It's modest. That's modest. I like it.
That's,
Make us ask the
I don't even know
questions.
where to begin. So,
Okay, well let's go
yeah.
here. Let's go back to the college days. So you played for a pretty big college.
Yeah.
You played at Tennessee.
Yeah.
The Vols, right?
Yeah, so I played kind of a couple sports in college, right? So I played, I was football, track, and then I ended up playing 2 years at the University of Tennessee, and then a year and a half at the University of Maryland football.
Awesome. So from the Vols to the Terps.
The Terps, yeah.
Terps.
Yeah.
Got it.
So it's fun.
Awesome. And as far, let's just kind of hang on that path right there for you. As a young businessman, I got to imagine the competitiveness within you stems from the sports. A lot of lessons that you've learned from sports that are still implemented in your life today that help you drive forward in business?
Yeah, so I always liked sports, right? Like I've always thought sports were good. I still do sports. Like I do jiu-jitsu and things like that, competing. I like the idea of just sort of competing in the physical realm. Business has always been something in my life, right? So I've always at some level, ever since like a birth, really have done something in business, whether it's marketing. Like I used to work for, when I was like 11 or 12, I used to work for a pager store, and I'd do their door-to-door marketing. And then when I was in my teens, I used to work for like a nightclub doing the promotions and the brochures and stuff like that. So I really stopped playing football to start a business. So it was sort of something I have always sort of done. And then as I've gotten older, just formalized it, really.
Awesome.
Just formalized it.
Was that something did your parents kind of get you into that? Did you see that in your family? Did you see that from friends? Or how did you kind of get that?
Honestly, it was my dad. So my dad was a real estate appraiser, so he always had his own business. He just worked by himself, though, right? So you just think when you work by yourself, you're getting up and you're marketing. You're just kind of a solo practitioner. You're doing accounting by yourself. You're, doing some sales work. You're doing the actual work. And so I grew up kind of hanging around that, right? And so, for instance, when, if I'm a young kid, what are you going to do to pick up some business? Where you're going to go solicit, right? You're going to go door to door, hand out brochures, things like that. Influence of my parents, and then just sort of some of it's just intrinsic. Like my brother owns a business. It's sort of just it was just very natural. Like the idea of getting a job or something wasn't even discussed. It wasn't even on the table. But it wasn't like go out and start your own business either. It was just sort of like, just,
So your dad was an appraiser.
Yeah.
And you owned a pretty big, appraisal company.
Yeah.
So I'm assuming you just learned a lot from him to going into that business.
Yeah, so he was retired. So he retired when I was in college. And he was probably retired like 3 or 4 years. I already had my appraiser license. I just got it. Actually, when I was in, between football practice, I used to go into appraisal.
What year is this?
This is like 2003, 2004, maybe like 2003 to 2005.
Yeah.
Right around there. So maybe like 20, 22, 23, something like that. And then, honestly, just, I kind of knew how to appraise, and I knew how to go get business just from learning soliciting with the clubs and learning soliciting with the pager store and some other things that I did. And so when I started soliciting as an appraiser, it was like a layup. I mean, it was just sort of like I would go to 15 or 20 offices a day of mortgage companies and just say, I am an appraiser. You need an appraisal.
Sure.
So, I mean, it's just
door
pretty,
knocking.
Yeah, just sort of door knocking.
Yeah.
And I didn't really think anything of it, to be honest with you.
Is that how you built like a bigger book of business? Was just essentially door knocking with mortgage companies?
Yeah,
Back in the
it's pretty
early
straight.
2000s?
I mean, I do the same thing now that I did when I started.
So, Chris, remind our viewers again who it is we are and what we do.
Hey guys, both Dominic and I are loan officers here at Liberty Home Mortgage. So if you or anyone you know is looking to purchase or refinance a home, please email us at the elevateclepodcast@gmail.com. Subject line, looking to purchase or refinance a home. Email's in the description.
It's just a matter of establishing a routine in a database and then just putting that routine in a database into some sort of consistent drip. Like, so for instance, when I was local and we did, let's say we did 5 or 6 visits a day to mortgage companies, to people, hey, we're going to drum up your business. When we got national, it was 5 or 6 people a day just in different cities.
Sure.
Right? I mean, it's the same thing. And it's the same thing on the real estate side, right? So just going and working with people. It's usually like 5 or 6 people a day is about as most as you can do. Besides like drop-ins when you're just trying to drum up business.
Yeah.
You can do probably 20 drop-ins a day.
Sure.
But the big thing is physically going out there and doing it, right? So physically going to the city, physically going to the offices, physically going and seeing people. I mean, you guys see me do that.
Yeah. So
absolutely.
Dominic and I have been we've been loan officers for 3 years now. So I think for me, the appraisal process is different than it was now, because we don't talk to appraisers.
No.
We go through an appraisal management company. No. It's a lot like borrowers never understand that.
No.
They always start thinking like, hey, Dominic, when is the appraisal scheduled? Like, are you going to call the appraiser and schedule it? And I'm like, no, like I don't talk to the appraiser.
Yeah. We're a little removed.
Exactly.
Yeah.
So how, take us through that. I just want to understand, maybe that's good for anybody who's listening, who's purchasing a home in the near future. Like, how does the appraisal process work?
So the history of the appraiser profession is really based around trust, right? So the idea of, hey, like you two guys decide you want to buy a house. Well, how much is that worth, right? And so the profession was designed around, hey, you're the most trusted individual. You're fair, you're unbiased, you're impartial to the outcome, and you understand laws associated with real estate. Real estate has laws, right? Real estate has rules. Real estate has restrictions, right? You can only, you can't build a house in the middle of the ocean, right? You have to build it on land, right? There's certain height requirements and restrictions for zoning and things like that. The appraiser is sort of like the guy who puts it all together that says, hey, this makes sense or doesn't make sense. And that is outside of lending, right? The appraiser profession exists. When you think about the appraiser profession at its best, you look at it in, agriculture and farm. You look at it in commercial redevelopment, large-scale development. The appraiser as an appraiser doing residential property, so let's say single-family townhouses, has lost a lot of its usefulness just largely because of the automated valuations. I mean, they can dial that thing in specifically.
You're talking about like a Zestimate or something? Or
just the use of mass data, right? So the use of if you're in a townhouse and your townhouse is a 3-bedroom, 2-bath, or you buy a condo and it's a 2-bedroom, 2-bath, I mean, people are going to only pay so much for 2-bedroom, 2 baths in that area.
Yeah.
So it's pretty easy to determine the value, within a reasonable range. The loan officer, the mortgage companies know they're going to lose a little money if something goes wrong anyway. So it's just easier, faster, and they know it's as accurate as it needs to be, right?
Of course.
Before that, let's say, right, there was a lot of commingling with the appraisal staff and the loan production staff.
Collusion,
right?
Yeah.
And a lot of that kind of unfair bias input just caused a lot of problems, right? I mean, it just caused problems with buyers. There's some wiggle room in the appraisal, right? And so if you have a situation where it could be worth $330, but it's probably worth $310, and you do 1,000 loans like that, I mean, then you've got a real problem, right?
Yeah.
If you have a situation where you take the biases out completely, and it comes in 310, well, at some level too, you can do an automated valuation module for that and get that sort of medium number. So the appraisal profession is going through a lot of change, and I think honestly it's going to get, a lot of the work is going to go out of the residential mortgage field and go into more of the like probate, estate, divorce, commercial valuations. How do we divide the land? Stuff like that, which is just designed around being a trusted professional. Did I answer your question?
Yeah, no, I imagine so. Yeah, it makes sense. So, like, let's say Dominic and I are purchasing a home, and you're the appraiser. Like, how do you determine the valuation specifically? Like, I know you have
Okay. So you would just look at what you're looking for is market, right? So the market perception of that home, right? So the first thing you want to do is identify the problem, right? You're trying to determine the value of this house, right? You can determine the value of a house based on so many things, based on, what it could rent for. Right, so there's an investment value, right? You could determine, just market value, right? So how much it is just for a normal person to buy. Both of those, you're just looking at comparable sales, right? And that's 90% of it. And you would essentially assess, okay, if I'm looking at this property, comparable to this one, comparable to this one, comparable to this one, there's mathematics that sort of reconcile that, whether it's a garage or square footage and things like that. And you're just taking all the comparable sales and reconciling them against the subject. It's very simple, right? In the sense of, hey, this one has a garage, so it's going to pay for a little more. This one has a carport, so maybe it's a little less. This one has 2 parking spaces. Okay, so what's the difference between a garage, 1 carport, and 2 parking spaces, right? Some level, you could say I would rather have the garage. Some level, I'd rather have the carport. At some level, I'd rather have 2 parking spaces. Right? Yeah. So the appraiser's job is to take that and say, okay, well, let's see how the market responds to a garage versus a carport, and provide some mathematical data that says, hey, there's a difference, and then that goes into the valuation, right? So you're taking similar comparable sales, similar homes that have sold, similar homes that are listed and under contract, and sort of reconciling them all into one.
Yeah.
Tell them like what makes it a comparable. Like why is it this house is being compared to this one versus compared to this one?
As not compared to that one.
What character is it?
Yeah.
You know what I'm saying? Like
so
square footage,
things.
colonial style, split level, like distance.
So really, so I would use the term functional use, right?
Okay.
And so each home has a functional use and a functional utility. Okay, that is encompassing of, let's say, for instance, a 3-bedroom or 4-bedroom house has a different functional utility or functional use to a 2-bedroom house. Because 2 bedrooms, you can't have more than one other person, right? Where 3 bedrooms, you can have a family, you can have 4 kids, they can share a bedroom. 4-bedroom, really useful, right? Because most people don't have more than 3 kids, so you can have enough room for everybody. So, for instance, comparing a 2-bedroom house to a 3-bedroom house, even though they might have the same square footage, is inappropriate because they don't have the same functional use. They don't have the same functional utility. So, for instance, also with school districts, that's a big example.
Really?
Right? So they talk about, in the African-American community, a lot of appraisers, this is actually on the news all the time, in the African-American community, a lot of appraisers are redlining or using like racial bias, right? They're not appraising the thing properly. The reality is there's geographical boundaries associated with the school district that create those value differences. The county or the state could change that 1 second just by saying, if you live in the county or state, you can go to any school you want, right? But for instance, if you're in an area that's more affluent area, generally the schools are better. So there's a geographical boundary that says, okay, you have to use comparables within the same school district, right? So you have to use comparables in the same school district, the same area, with the same functional utility, and the same type of amenities, and then you have a proper comparable. Now, that's easier said than done, right? Because you have situations where, especially if you go to like downtown Cleveland, you have these renovated properties or in sort of these like up-and-coming areas where somebody spent $100,000, renovating a townhouse that was built in 1910. So you have to then decide, okay, I got to find renovated comparables, which may or may not be in that neighborhood, right? So then you have to,
So then how far can you stretch? Because typically you try to keep it within how many miles of a radius. If you can't find anything within that, what can you stretch
so
to?
Generally speaking, right, so there's Fannie Mae guidelines. So we're talking mortgage. So the mortgage guidelines for appraising are different than if you just were an appraiser, right? So if you just hired me out of the blue versus a mortgage, it's completely different.
Really?
Because the mortgage guidelines are designed around a single-family house doing a loan versus, like, for instance, a downtown Cleveland, just residential property.
Okay.
The high, you might get there and say, look, this looks great, but they just built a bar here. They just put an office here. This should be converted to commercial. Like, there shouldn't be a loan here.
That makes
right?
sense.
So that's where the appraiser's job is like, no.
Highest and best use.
Highest and best use, exactly. Those types of things. And so there's a tremendous amount of discretion when it comes to that, right? And so the appraiser is going to look and determine, what are the best comparables, right? But then, for instance, and this isn't used in lending, but in, for instance, probate, divorce, and some other types of valuations, you could do a cost approach, just purely how much it is to build, right? You could do a rental income approach, right? Just purely how much rental income would be off of it. Like a good example would be, let's say, a college dorm, right? So as a purchase property, right, I can buy a house in Alabama, a 2-bedroom condo for $130,000. Okay. So if it's $130,000, and for instance, all the other homes are selling for $130,000 as used, right? Okay, but I can rent it for $600 per room, right? So the rental income is actually more than the mortgage, right? So if you were buying it just for single-family use, it's only worth $130,000. If you were buying it as an investor, well, you can draw.
Cash flowing.
It's completely different, right? So now the value is higher. And so, for instance, there's valuation principles for both. So if I was an investor, I would look for properties that I can buy at residential usage and that rent an investment property. Now, if you look at the 2003, 2005 crash, where 2007 crash, where the whole thing went through the tank, you had situations where you couldn't really find a property that would cash flow positive, really regardless of the area. I mean, very few, even if you put 20% down.
Yeah.
Right? So you have just single-family houses, really, that were selling for people to buy, but the rental market wasn't supporting it. Right? So you got to really look at both, right, and kind of play both. And then there's obviously the building, right? So the appraiser would look at all three of those. And from all three of those, you'd be able to determine, like, okay, is it an inflated market for renters, for investors? What would it cost to build? And then you can get to the facts of all those decisions relatively quickly. And then you'll kind of know what to do, right? Because if it's not zoned, if it's not a highest and best use, if it's better to rent it, as an investment property, you kind of approach it all three ways.
Do you miss being an appraiser?
No, not at all. No. I think everyone should know how to appraise. I don't think anyone should be an appraiser.
No, yeah.
No.
You like what you do a lot more?
Yeah, it's just different, right? So the profession itself has evolved, and as professions evolve, you want to kind of go with it. It's just different now, right? Just the structure of it, the legislation associated. There clearly is ways of doing it automatically, more efficiently and faster. There's clearly ways to do that better than it is right now, and it's kind of getting squeezed from all areas, both by lenders, by consumers, and by technology, and then by the appraisers themselves. So it's sort of everyone should learn how to do it, but could you go to someone else?
Did you were on the appraisal management side as well, or were you just the appraiser?
No, I had an appraisal management company.
You had an appraisal management?
Yeah.
Okay.
So I started. So I started a Coester appraisal group, probably 2005, 2006.
How old were you?
Probably like 22, 23.
Okay.
And then I grew that from just me to then maybe we had like 20 appraisers, 25 appraisers that were just like appraisers working for us. And then we probably 2008 is when we flipped it to an AMC. And I didn't even know what an AMC was at the time. It was really, and I was working at Cash was one of he was working at another company at the time. But it was really kind of organically. It was not like on purpose. It was just sort of
Explain
like.
to our viewers what the AMC is.
Appraisal management company, right? So similarly to, people need appraisals, right? So, if you're a lender in Ohio, you have, a buyer coming in or somebody who needs to refinance in Cleveland one day and the next one in Toledo and the next one in Akron, and you need multiple appraisers. You need ones in multiple states. Appraisal management companies essentially just have those appraisers vetted and ready to go across the country so that as a lender, you can engage with them simplistically and then get the appraisal back in an efficient manner.
So essentially, we get the contract, we just submit the order,
Yep.
and then we trust the appraisal management company to go ahead and get in touch with that appraiser,
Yep.
split the fee between them, send the appraiser out, review it, and then it comes back to us.
Correct.
Okay.
Correct.
And ultimately, what led to you getting out of the so the appraisal business grew into and blended into the appraisal management company? What ultimately caused the shutdown of that company or forced you out of there?
Beautiful, beautiful disaster. I ran that for about 15 years. So let's say from maybe 21, 20, I don't remember the exact age I was, but let's say 22 to probably 34. And we were big. So we were doing about 15,000 units a month, 20,000 units a month.
Jesus.
Yeah, we're big. We're pretty
How much
big.
money were you making at that point? What was the most money you made before, between 22 to 26? Do you remember?
Any given
The
month?
company.
The company?
Yeah, what'd you grow to?
Oh, 40 million a year, 50 million a year.
Woo!
Yeah, so it's probably, we did like maybe 300 million.
All before 28, 29, 28?
About 34, something like that. Yeah. 30,
Awesome.
33. Awesome. Yeah, so we had Quicken, we had Loan Depot, we had all the big boys, and we lost. So this was a really bad month. So Loan Depot was going to go public. And so we were the number one appraisal management company for Loan Depot for 8 years, 7 years. So we were with Anthony before he even had Loan Depot, when he went to the Home Loan Center.
The CEO.
Discover Home Loans, and then he sold to Discover. The Lending Tree Home Loan Center, we did his appraisals. And so we were there, we were kicking butt. They went to go public. We were the smallest vendor of all of them that, like balance sheet wise, we weren't even close. Like First American has, multi-billion-dollar balance sheet.
Right. Damn.
$3 billion, $5 billion, way more than that actually. And so when they went public, we really just didn't make the screening of the investors. They were like, this vendor doesn't have the balance sheet to withstand the pot of public scrutiny, so they cut us off.
For where they're going.
Yeah, for where they're going, right? Yeah.
Even though you were the preferred AMC for them.
Yeah, it sucks, right? It's kind of one of those things.
So once that spigot turns off, that dries up the well right there.
Yeah, so there were 5,000 units a month for us. So you think about what lenders doing 5,000 units a month?
Right.
None.
Yeah.
Right.
And so we went from doing 15,000 units a month to 10,000 units a month. And then we lost another client, and then we went to 7,000 units a month. And then even when we went out of business, we were still cranking out 5,000. We're still cranking out a lot of business. It's just, and we maybe lasted another year and a half, 2 years. And then we couldn't get over some issues with our bank, honestly. It was just we had a multi-million-dollar line of credit with a bank that was against their receivables, and then so what do you do with the number one lender?
Yeah.
You can't do anything.
They call it due. Hey, we need our money. You got to clear the books, right?
Hey, what do? You can't do anything. So it is what it is. Yeah.
Growing to 40, 50 million in a year. You were the main AMC for a lot of big companies.
Yeah.
And
Big
companies that
names.
have since
Big names.
exploded.
Yeah.
I mean, Quicken is absolutely massive. Rocket.
Loan Depot.
Loan Depot
Movement,
is
we did
huge.
stuff. Yeah, we did everybody's Freedom,
Movement.
all of them. All of them.
What I mean, I can see in your personality, you have a lot of charisma. You're the networker. There's
Yeah.
no doubt about it. Again, the jack of all trades. I've flown down to met you in Florida before. We were
Yeah.
at the real estate team, etc. And you could pick conversation with anybody. Is that you're doing going out and networking with these like who did you meet with that Quicken to say yes, we want to go with you, we want to go with the Coester Group? Like who did you meet with that Loan Depot, and how did you establish and create those relationships and obviously continue them on for them to want to do business with you?
Good question. So it's not that complicated, and it's different. It's a different answer than what you think. Not I want to say what you think, what people think. So it's pure technical expertise, right? So all of that is pure technical expertise. It's not anything fancy. It's not anything salesy. As much as I do have the salesy personality and stuff like that, it is really attention to detail, technical expertise.
Like being the
How
expert
so?
of your
Yeah.
product, is that what you're saying?
Well, being familiar with how to work. So for instance, and I always joke about this, right? Like a lot of guys want to be successful, right? A lot of guys, want to, go out and make it happen.
Okay.
And they do that sort of in a way by promoting themselves, by salesmanship, by making a lot of noise, right? And then when you look under that, under the hood, it's just a lot of noise, right? If you look under what we do, it's very technical, right? So meaning like we dot every I, we cross every T. We're, for instance, with Coester VMS, we ran 7 days a week, 24 hours a day. We had an early shift and a night shift. We'd never stop. We had very sophisticated direct integrations with all the loan origination systems and the government services agency. We had very strict service levels that we would adhere to. So, for instance, if you told us, hey, this is how we want this reviewed, this is how we want things done, we'd stick to it 100%. And we'd also send you a report that, hey, not only we did that, we checked our own work. And so, like, the underlying assets of you could put us against, the biggest companies in the world, and you could check our work, and it would be like, these guys are good. Like, you can't take away. Like, you can't.
That type of professionalism.
You can't take away. Like, they follow up. They're on top of
So you let that
stuff.
compound. It wasn't necessarily like, oh my God, you're this face that's going out and wooing all these CEOs and the people making the decisions. It was just, hey, let me just show you. And then they see it and they're like, wow, okay, you're
No,
to the T,
so
you have
if
it.
anything, I would shy away from all that. Like, so from I know I don't look like that. My personality is more salesy, but not really, right?
Okay.
So I completely shy away from, I don't want any smoke and mirrors, any bullshit, any salesmanship. I want to be completely transparent. I want you to know what I'm doing. And I want to walk you through what I'm doing, right? So here's how we go about at Real Estate Connection doing things. Here's how we go about doing things here. Here's our touch points.
Yeah.
Here's how we're going to engage with our customer. Here's our scripts that we're using. Here's the follow-up process that we have in place. And then not only am I going to do that, I'm going to provide you a report that says I did all that, like Hessian and get some of these things, right?
Yeah.
And then from that, we're on solid footing,
Okay.
right? Because
Okay.
I'm not playing around. Like, we're on solid foundation. And then from that solid foundation, you build trust and you build a relationship with somebody.
That's a really good point.
Yeah.
Right?
It's a
So
really
you
good
say,
point.
okay, I've done all my work. I cross all the I's. I dot all the T's. Everything you asked of me from a service level perspective, I've delivered on. I'm professional. I'm on time. I've done that consistently. And then now I'm ready for the next step. And then now I'm ready for the next step.
Yeah.
And then now I'm ready for the next step.
A lot of just soft skills, really.
Yeah, seriously. It's not even necessarily I figured it was right away. My assumption was you just going out and you're the spokesman, right? Just bringing these people in, bringing them out on lunches, private planes, going to the clubs at night, this and that.
Yeah.
Right?
You kinda let your-
Almost none of that. Almost none of that.
Yeah.
Almost none of that.
Where to you it's just look at our process, how buttoned up we are, and these people are like, okay, these guys.
The name
these guys are
speaks for
legit.
itself,
Yeah, it
Yeah,
speaks for
that's
itself.
exactly right. So
Speaks for
it's
itself.
more or less like quality, technical expertise, competency. And then what you realize amongst a competent group, so you could go to Loan Depot right now or Quicken or Movement or these giant companies, and you've got guys pumping 3,000 units a month that
Yeah.
oversee a division, or like USAA, they were one of our clients, 20,000 units a month. And the guy doesn't even think anything of it. He just knows what to do, right? I mean, he knows how to manage a company that's doing $20,000 a month, right? Just like the same thing at Walmart. The average Walmart has 500 employees. So somebody who's, the general manager of a Walmart managing 500 employees, he doesn't have some camera crew following him around like he's some big business guy, or he's just he shows up and does it, right?
To him, it's whatever.
It's just technical work, right? It's work that needs to be done. That is drastically underestimated. Drastically underestimated. Meaning, like, when you really look at most people, like, for instance, in the loan origination space or the real estate space or in any business, they have a very small skill in promotion, right? Which has kind of led them to sales. They have some expertise in their division, in their profession, right? Which has led them some success with sales in their profession. And then there's a giant black hole in anything else. Meaning, like, if you got into the underlying business, what's the underlying meaning? Is there processes, procedures, stuff like that? And so, for instance, like a kind of thing from every business or all the business, like especially a real estate connection, I mean, we manage the crap out of the thing, right? So we have daily business plan review meetings. We have task lists that go out to everybody. Everyone has a job description with a task list, with a weekly task list. So you have to turn in your task list at the end of the day. The task list is assigned to the org chart. The org chart is designed to fulfill our core principle to our customer. So, for instance, all the calls need to get delivered, and all the calls need to be made within 20 minutes. All the buyers need to be called back the same day. All files need to be assigned to the real estate agents before close of business. Things like that, and they have to report back on a daily basis that all that was done. Then the manager summarizes that and say, okay, we did everything we were going to do today. And if we didn't, what happened? Right? Why? So things like that is really where you're creating this sort of feedback loop of technical expertise and then the salesmanship comes in the sense of, like, we understand that you're going through some issues with your real estate agents or with your mortgage, and we have a solution, whether it's down payment assistance or some online app or some whatever the new thing is that you're talking to them about, to help you with that, right? And then you just sort of market that over time.
Sure.
And then over time, you end up in a completely different place than you would if you just went out and, let's say, just tried to sell.
And how many people work at Real Estate Connection?
About 40.
Yeah,
45 right now. Yeah.
And I don't know, like, are there other real estate connection companies? Because I haven't really. Have you? I don't know if
I've seen. I feel like I've seen a couple names, but
yeah,
I don't know. I mean, I'm sure there are. I'm sure there's probably not one that does exactly what we do. I mean, we sort of just kind of do our thing. There's companies that do versions of it, right? In the sense of, like, they have agents. There's referral networks and things like that. So yes and no.
But your idea is pretty unique, though, because I remember when Hesh approached us with Real Estate Connection and you were introduced to our company. I was like, dude, this is a smart idea.
Yeah,
like, this is really smart.
That.
I'm tired of getting shopped by by this real estate agent in Florida who's got the local lender, and I can't do anything. I'm not going to fly down to Florida and pitch myself and pitch my company.
Right.
Well, Real Estate Connection comes in. Hey, Chris, we got this awesome real estate agent. Jim Brown. He's been doing this for years. Give him a call today, and he's awesome. And then it takes away that whole it validates everything.
Sure.
Because that real estate agent now is validating us as the lender. So I thought the idea was super freaking smart. When you guys came to us. So are you guys expecting there to be competition in the future where you kind of just, battle that out? Or is it more just you're kind of just doing your own thing, just growing, not looking at the competition, just...
Yeah, so I pay attention to everybody, and I pay attention to everything, and I pay attention to all the businesses. I don't look at anybody as competition in the sense of, like, at the end of the day, it's really about adding value to your clients and customers, right? And so I know it sounds like overly cliche to say that, but it's true in the sense of, like, you can tell when a company is really focused on their clients, really focused on their buyers, really focused on their end customer versus the clients who are focused on people who are just focused on making money. And so I've always gotten the advantage on, like, even against, with previous business, on solely focusing on the customer, right? Like obsessively focused. Like you have to have your business model so that it makes sense financially, right? So you have to have all that in place. You have to have, your payment structure and how you go about collecting money or receiving money set up, like, so you don't go broke, like your cash flow is there, right? Mm-hmm. And then once that's established and you have, like, let's say, for instance, some cash flow coming in pretty consistently, everything shifts to how can I just be the best for my customer, and then there's really no detail too small.
Yeah, the money always comes, especially, like, how many times have we heard that from, whether it's our managers or whether it's our CEO Hash, is just focus on the customer and the money will come after. Like, if you're trying to chase the money, you're just going to get caught in the rat race.
Yeah, so yes, and what you want to do is also, like, for instance, if you can align yourself, like, all right, you like helping people buy houses, right? And you're also renovating houses, right? Mm-hmm. And so you do some investment, you got all these things going on. So if you can align yourself, like, look, at the end of the day, there's a lot of confusion about people buying a house. So no matter what I do, whether it's a podcast, whether it's home renovations and me buying a house, or whether it's me doing a mortgage, not Liberty Home Mortgage, but Doyle Enterprises, takes care of its people, right? And you can define that, right? You can define that in a sentence. You can define that written. You can define that, however you want to define it, right? But there is something that it means to you. Mm-hmm. And then when your business, and you start treating your business like that, and to say, okay, I've decided that we're always going to do the right thing for the buyer, let's just say. So even if it means sending them to another lender, even if it means telling them, hey, this is not going to be your house to buy because I don't think it'll fit your family, and I'm going to lose some money on it, or even if it's giving somebody their money back, per se. I'm always going to do that. And then over time, those kind of really good decisions that you've made develop into a whole other enterprise into itself, right? Where, there's value there, where you pick up a phone call and you get Hesh immediately, right? And he gives you, what you're asking for immediately, sort of things like that, because there's trust there. That's more relevant when you're talking, like, that is, how to go about, let's say, building a business. Because what happens is so many other people aren't focused on that. They're kind of selfishly just trying to make a whole bunch of money, that people recognize it immediately. And you can separate, and they use the example of, like, American Idol, right? So American Idol is probably the best example because everyone sees it. You can tell the difference between the person who, like, stayed up to 2 o'clock in the morning practicing their singing, and this is like their one moment, and they're on the ground screaming, singing on their knees, almost crying this song that they're just channeling,
right.
Versus, like, the person who just wants to be popular and is just there to do the little show, right? And so if you just take those two things, that's really kind of the difference maker, I would say. Like, you want to focus on being that person where, like, this is what I'm doing. I'm glad I make money doing this. I'm going to take care of my people. This is personal, right? It's not just some transaction. Here's my cell phone number. Call me if you need anything, and we're going to rock and roll.
Yeah. John DeJulius.
I was just going to say,
yeah,
sounds a lot like John
Dude,
DeJulius.
sometimes we do that. So
hey, we've already established that.
You guys are the same cycle now.
Yeah.
Right?
You go ahead.
Yeah. No, honestly, like, the whole time I'm thinking John DeJulius, one of our recent guests, we just had him on a couple days ago, and I was telling you a little bit about him when we were showing you around, the headquarters here, and he's all about the customer experience, know, and essentially just, like, one thing he told us is, I oftentimes deny the opportunity to get advice from people on how to further advance my salon business, John Roberts Studios, from people who are in the business already. He goes, I want the unconventional style. So he learns a lot from, like, other companies.
Apple.
Like Apple, their new studio they just opened up is, like, completely like an Apple front store. You walk in, there's a concierge with an iPad that checks you in. You don't walk up to, it's just very unconventional, right? What do you think? You walk into a salon, you go up to the receptionist behind the desk. Ms. Jones, please take your seat. Your stylist will be with you in 15, 20 minutes, right? So it's completely unconventional, but he is so 100% dialed into, how do I become that person's memorable moment? And it sounds like, in somewhat of a related way, that's your mindset as well, is I don't need to go out there and, like, schmooze over these CEOs. Let my process be the 100% thing that sells them, and I'm going to make sure that my employees are on board with also delivering and coming through and over delivering on those expectations as well.
Yep, 100%. So what you're doing, and I call it a feedback loop, right? So you're creating what's called a feedback loop. So if you think about like the most simple example of a feedback loop is McDonald's, right? So you go through the drive-through in McDonald's, you place your order, and you come around this little loop, right? And they take your money, and you come around this little loop, and they give you your food, and you go out the loop, the same entrance that you came in, and you're out the door, right? So that feedback loop, let's say, takes 2 or 3 minutes, right? So they measure the success of that loop. But that loop keeps you coming back, even though the food kind of maybe not be that great for you or maybe not that good. And so when you talk about a customer experience or anything, whether it's Apple, whether it's a mortgage, whether it's real estate, whether it's coffee cup, it doesn't make any difference. It's just a feedback loop. Like you expect this water to taste like water, right? So people have in their mind, okay, I want my mortgage company to be like this. I want my real estate company to be like this. I want my food to be like this. I want my customer experience to be like this. And there's examples, whether that's Apple, Target, McDonald's, that have set an expectation that if you mirror that feedback loop and an expectation, you'll get the same result, right? And so it's sort of like if mirroring other industries with just the basic of like, okay, this customer is ultimately just interested in completing that loop. So if I call you, you call me back. If I send you an email, you give me the documents that you requested, right? Now the fun part is, and this is where kind of the customer experience in business comes into play, is when you start documenting this stuff and you can pretend like you know what you're doing. So you start anticipating what they're going to ask for. Like, do you need napkins and a spoon, right? Because you're going to need napkins and a spoon and a straw for whatever you're eating, right? Or hey, do you want a copy of your credit report or something because you never seen it before and you're first-time home buyer, so they might want a copy of it. Or do you want a first-time home buyer's guide, right? Because that's what most people ask about. Or if do you want down payment assistance because 20% of the people ask about it. So when you think about your business, you have all this input coming in, and then you say, okay, well the input by nature has to have an output. That output creates a feedback loop. What am I doing as a feedback loop? If there's nothing that you're doing, then it'd be like somebody taking the order at McDonald's and saying like, hey, can I have a steak? They wouldn't just say, oh, pull up to the next menu. They would say, we don't serve steak, right? That completes a feedback loop, right? Whereas, let's say, for instance, somebody calls a real estate company and says, hey, I want to buy a commercial property. We don't do commercial properties. Okay, well, that completes the feedback loop. But really, what they want, good customer experience, good customer service, is to actually talk to somebody. So what I'm going to do is I'm going to pretend like I know what I'm doing and say, hey, we don't have somebody right now, but I can get you somebody, right? And then that now you're starting to provide service. You're taking it to that nth degree. And that really never stops, right? So you can take that, for instance, if you were starting a business, it's the same thing as scaling a business. So for instance, to go from you, just one person, to 150 people, is just creating feedback loops in a consistent way, right? So for instance, somebody wants a mortgage, they go to you, or they go to Doyle, right? And then say somebody wants 5 mortgages. Well, now you have to have a team, right? You can't do them all, right? But that feedback loop that you guys are creating is the same. So to scale the business is just really like making good decisions on solid foundation and then sort of using your eyes and ears to sort of say, okay, what is this person really expecting? And then how can I predict before they ask what to give them to fulfill that need.
And that expectation of how it should go.
And then once you start that, you're playing to win. That's a whole different way of thinking, a whole different way of approaching it. You're playing to win now because you're anticipating. You're already taking care of everything.
So do you think a lot of businesses ultimately do you think they lose business or lose revenue because they are not customer oriented or they're not chasing the feedback loop as they once did? Like, for example, like I just think of like Zillow, for example, recently in the news, they have a certain clientele and they have a feedback loop, right? Like you're saying. But now they want to start chasing this iBuying and everything, and now maybe they're off the feedback loop. They're like, all right, well, maybe we want to go veer into this, which I get businesses you have to evolve and you have to take risk, but I don't know if it's, hey, now we were customer-oriented, we were doing the feedback loop, now we're going to try and be greedy somewhere else.
Yeah, I wouldn't look at it like they're trying to be greedy as much as
not necessarily greedy.
Yeah.
I guess that's the wrong word. I guess they want to be able to increase their revenue by taking risk, but is it necessary? I guess I don't know.
Yeah, so a couple things with the Zillow, right? So Zillow gets a lot of traffic, right? So Zillow gets billions and billions and billions and billions of people who come to their website, right? Who have a couple questions, right? I need to get a mortgage. I want to know how my house is worth. They have a rental business, right? So I want to rent a property. And then also, hey, I just want to sell my house and be done with it, right? Mm-hmm. The problem they have is service providers, right? Because they can attract a bajillion traffic. There's not a company in the world or a person in the world who can actually do the service, right? It's just not going to happen. They get something along 4 million pre-approval requests a month. So even if Loan Depot, Quicken, Freedom Mortgage, and Fairway Independent combined, they wouldn't even be able to make the phone calls. Mm-hmm. You just forget it. So this consumer behavior says, I need real estate. I need help with this. I have all these things. And then Zillow is essentially trying to monetize that, right? So they have different verticals, right? They sell ads. They sell they have real estate ads that they sell for real estate agents. They have tour requests that they sell. They have long form and short form funnels. Just sort of trying to service these people. The iBuying, I think, largely came around because there is not a centralized sort of way of purchasing or selling a house. Selling a house, right? So multiple companies are opportunistically approaching that. Mm-hmm. Zillow just has the traffic to do that, right? But at the same time, and I love Zillow, but they've been unprofitable too. Mm-hmm. So it's like they're trying to find a model that works. They know sort of people are interested in this sort of real estate, and they're trying to figure out how to monetize that so they can be a profitable company. There are other global portals out there, very similar to Zillow, that do something similar, right? And by nature of the real estate business, real estate's kind of messy. Like you have a lot of mortgage companies and title companies.
A lot of hands. You got a lot of hands, yeah.
Yeah, and that's normal, right? So for instance, I send you deals all the time, right? So we send you stuff, right? Well, some buyers want to work with somebody who's just local, right? Yeah. And they say, I want to meet with somebody in person. Okay, well, I can't not have somebody who's local, right? And then at the same time, there's a lot of mortgage companies who own title companies, right? Or own other companies where they say, as much as I use other companies, I still have an element of I could just self-digest these and I could provide good service. Almost all real estate companies do that. So Zillow's in that same category of just trying to capitalize on who's closest to them in the best way. The iBuying thing, the problem with that is it just doesn't work on a national basis. So there's fundamental issues until you get up close. So like a guy was an appraiser, so I see these things up close. The sexy element of like flipping houses and I'm going to buy low and sell here and make all this money and stuff like that just doesn't work on a national basis. It has to be local because with these deals, you really don't make as much money as people kind of portray. And you make your money off shaving things. You make your money by buying $5,000 less, by having some of the tiles already left over from your last renovation that you're just going to put in, by having your own crew to come in and do the work or doing a lot of the work yourself and saving $15,000, $20,000, and then you're making a little bit of money.
So you make money marginally.
Yeah. Right? Doing that on scale and having contractors in place and agents who are just looking to get it done, and it's
you got a lot of moving pieces.
I think if you buy the house,
that $15,000 that you would have otherwise saved. Well, that's the money that you make.
Yeah,
that's it. Right? And so even these investors, like we meet with investors on the real estate side, and they're like, I want to go flip it. I say, look, if you don't have the cash right now to pay for it, right? If you don't have your crew who's going to come in here and do it right now, and maybe half the materials just sitting somewhere that you got free from another job that didn't do it, you're not going to make any money off this. Because that's who you're competing against, is these guys who do this and have it, and they're going to come in and bid at $120,000, and you're going to say, how the hell are they doing it for $120,000? And it's like, because they're going to go do it this weekend.
Is that the advice you'd give like for anyone who is trying to get into the flip game. Let's say, I mean, I personally don't have any intention or inclination to go into house flipping, but let's say I did.
Yep.
Like, what would I need to get started if I wanted to make that a good, let's just say, side hustle, for lack of better words?
Side hustle. So I would tell you to buy a house, fix it up yourself, and rent it.
Like, am I buying cash? Am I financing it? Like,
so
what's
you can
the
finance it. You finance it. Doesn't really matter, right? Buy, finance a townhouse, like a 3-bedroom townhouse. You know, that'd be kind of a safer bet, right? Something for a family, and rent it, right? Rent it for a year.
Rent it for
a year or two, and just that's a good place to start.
But also fix it up yourself so that you learn.
Fix it up.
Learn everything you need to do. So you could be the handyman as well and learn. So on the next one, if it's just simple laying down floor, throwing in some paint and carpet, simple stuff, you could save some thousands, right, in labor by just doing it yourself.
And you make the money. There's some equity in the property now, right? So you make your money on the buy. So I would always say you want to find the cheapest house in the most expensive neighborhood, right? So there's value. So for instance, if you have an area where they're renovating houses, it's downtown Cleveland, people are putting a lot of money, you know, you've got Dan Gilbert doing stuff, so it looks like this area is going to come up. You can find a townhouse for 30, 40, 50,000, something reasonable. You say, perfect. There's a lot of people who are coming here. I can rent it for a good amount of money. I can make money as a rental. I'm going to buy it. I'm going to put some money into it. I'm going to do some of the work myself. I'm going to, you know, make sure I have some equity when this thing's done. I'm going to rent it for 3 to 5 years, maybe 2 years. And then if I do go to sell it, I know there's some margin in there. If I decide, hey, I want to keep it, maybe buy another property, well, then at least I have some experience. It's not in some huge rush.
I always hear, and this is just me, we've had this conversation before where it's just, I don't know, like I have this weird feeling where people just do the rob Peter to pay Paul kind of thing, you know, where they buy the property, they try and flip it, you know, they'll cash out refi or take a HELOC, buy something else. But it's almost like I see it as just having a lot of bad debt. I don't know. But what you're saying is, hey, buy it, keep it for a couple years, sell it, or I don't know if you would recommend...
Buy a second one?
Yeah, and then do a second one. I don't know if you would recommend cash out refis or anything like that, or HELOCs, or to buy something else, or utilizing leverage or not. But I don't know. What's your take on that?
I like that.
Yeah?
I like that. Yeah, I like that. You want to use debt. You want to be smart about it. You want to do debt and cash flow. Mm-hmm. So you want to be aggressive and then kind of common sense, right? So, for instance, to use debt to buy a property that has equity, right, and then to use debt to renovate it, and there's still equity, and you come in on, you know, solid ground, that's a good thing to do. If you're using debt, for instance, and there's not a lot of equity, and you're just barely scraping by, like a lot of the flips, where it's like you're paying 3 points on a $250,000 loan, right, for a hard money lender. So that's what, like $12,000, right? And then you've got general contracting costs. Then you have a listing agent fee or a broker's fee to sell it. So that's another. So even if you were going to sell it for $350,000, you bought it for $250,000, $15,000 out for the 3 points that you're going to pay to the hard money lender. 3 points are 5 points is really out to the listing agent, right? So now that's $30,000, $40,000. You haven't done anything. So it's like that you're not going to make any money doing it. And if you pay 30% or 40% to a general contractor to manage it, or all the overrides that you have to pay with cost of material and cost of labor, I mean, you can forget it. You're not going to make any money. As opposed to somebody who, the professional investors, or I would say more sophisticated, they're doing these things all the time. So they have the materials sort of left over. They can sell. They're paying cash, so they save that $15,000. They got an agent that'll list it at 1%, right? So you do 1% sell side, 2% buy side. So you save. So now all of a sudden you can make some money.
Okay.
So kind of how do you get into that? Well, you buy one property,
you work your
right?
way up.
You kind of work your way through it. You keep that one. Right, and then from that you get some experience to go into another one. You kind of get familiar with like, hey, are you really cut out for this? You'd
be more of an advocate for anybody starting. Like, I'm not part of a flipping company. I'm a single investor just trying to purchase property. So you're saying take the slower approach.
Yep.
Gotcha.
Like you got to develop a team around you as you go. Like kind of have like the one-stop shop where it's like, oh, I have my contractor,
Yeah.
I have my real. You got to
Yeah.
build those relationships as you go to the
Yeah.
point where, again, you're just making those decisions, and then all of a sudden they stack on and they compound on each other, and then all of a sudden 5 to 6 years down the road, you have a well-established investment company where you're able to just go buy the property cash.
Yep.
You have your team who will come in literally within 7 days after title transfer, do the job, and then within 60 days you're listing it again. With
Correct.
a realtor who's also on your team as well, and then also, by the way, they have a title company, right?
Yeah, exactly right. Exactly right.
And then you're saving money on margin,
Yeah.
like you said,
You're-
and making money on margin.
Everything's small margin. So you make your money. I always use the example like you make your money on ketchup and mustard, right? So,
Okay.
right.
Yeah,
so
sure.
it's everything's subtle, everything's small, right? Because just assume, right? And you asked a little bit about what separates the good businesses from the bad businesses. A lot of it is competency and just attention to detail, right? Like if you really got into the core of these businesses, they're either somebody who's incompetent, right? Like where they think something that's not true. Right now, if like the investor, right? Like just because you think you're going to flip this property doesn't mean you can, right? And just because you have some wherewithal to be able to pull it off a little bit doesn't mean it's going to go well, right? And it's like you can be really excited about fighting Stipe until you get to the ring, right? And then then you're faced with reality, and then it completely changes. So a lot of these people have sort of untested truths.
So you're saying like overlooking school district area. As far as like what they're doing in the area to maybe increase rents, or what they're doing to, like is their parks going up, or are they literally like, chain link fences with barbed wire on the top? You're saying like that, like overlooking certain aspects to that, where you're just saying, oh my God, I can go get this thing at a good deal, maybe make some money, I got the team, but not realizing that, dude, nobody wants to even rent this house.
Yeah.
Yeah, underestimating what's truly happening, right? So anything, you shouldn't really, in business, personally, everything, you really shouldn't expect anything to happen like just out of chance, right? And nothing should be really that hard to do.
Explain that more.
Meaning like, so like in, so for instance, America is big on trying. Like we're going to try hard, you got to go hard, you got to just do it, you got to suck it up and work hard, work earlier, stay up later, grind, all that stuff. It's kind of stupid. Okay. The reality is, is that, the same way you pick up this glass and go like, there are people who say, buy that commercial building, renovate it, flip it, and get back to me when it's done, right? Because they have everything set up, right? It's not some mad dash, right? They're professional investors. The same way Tom Brady just came back and throws the ball without even really thinking about it. Most people wouldn't even be able to take the snap. Right, I mean, it just wouldn't be able to even begin to take and hand the ball off to somebody. I mean, they wouldn't be able to do it. So it's the sort of getting yourself and your team organized enough and competent enough to say, what could we do as like a layup? Like you guys could do a mortgage for a purchase, like a layup, right? There's no debate. Right. Okay, so then you say, what would be hard for you guys to do? Let's say, it would be hard for you guys to do 1,000 mortgages a day, right? But there are people who work at Bank of America who could do 1,000 mortgages a day. Okay, so getting what they know, they would be able to very easily say, well, here's how we do 1,000 mortgages a day. And they would just write it out and say, well, you have to have this process in place. You have to have this process in place. You have to have a team for this. You have to have a department. You have to have a vendor management department. Yeah. You have to have this department. And then sure enough, you guys would be doing 1,000 units a day. No problem at all, right? You don't have to stay till 10 o'clock at night. Don't have to get here at 5 o'clock in the morning, right? It's just sort of natural. And so I always look at, okay, you want to focus on where your natural next step is. You want to focus on making decisions that are solid. And then how can you build upon decisions that were made yesterday that were solid? And then, as you progress towards this sort of ultimate goal of having your team in place, of having, these, this great process to flip homes or to help people do homes and mortgages, there's a natural sort of progression towards that, right? And then it's easy to do. You don't have to even think about it. Anytime you're trying too hard or you're kind of, it's sort of like getting hyped up before you lift the weight, right? It doesn't really do any good.
You're expelling energy.
It doesn't really do any good. If you're strong enough to pick up a weight, you're going to pick up a weight, right? Like if we went out and had a push-up contest and we're like, all right, cool, how many push-ups can you do? And let's say you did 100 and you did 120. And you say, okay, well, let's say I haven't been doing push-ups lately and I do 10. There's no amount of like will or effort is going to get by you doing 100. I'm never going to get there. And I could get there in a year or two.
Yeah.
So it's like recognizing where you're actually at, taking a realistic approach,
Sure.
And then saying, okay, it doesn't take much to get above the fray and above the ground and above the group, because maybe like a couple weeks. I mean, it doesn't take much. It doesn't take much to where all of a sudden now you're just on a completely different path. You're like going into uncharted territory.
Sure.
That makes sense?
No, it makes sense.
Yeah.
So there are two different schools of thought, and I just want to get your opinion on them, because people in our lives have said, hey, put your eggs into one basket and watch it grow, and, don't people who are like very against diversification, cash flowing from different vehicles and everything. And then there are other people that are like, oh yeah, we have, different revenue streams. We're doing this, that, the other thing, getting passive income this way. I could see both working. I just want to know your opinion. Like, do you think, because like Marcus Ogden talks cash flow and making sure you have diverse, multiple streams of income. But then you have guys like, Hesh, who are just solely like, I'm going to just ride this out, like, because he can make easily, millions of dollars just doing this.
Yep.
What is your take on that? Because I know you also have, you've had multiple companies.
Yeah, so there's a lot to that, because there's more to that question than just the question, because a lot of that has to do with temperament, right? So you have people. I would never suggest somebody to just be a master of one thing, right? So like say jack of all trades is a master of none, but a jack of all trades is better than a master of one, right? It's like the complete thing. All right?
I haven't heard that yet.
That's the complete sort of thing. So what you want is a very broad skill set, okay, and a very broad skill set that you could get paid to do. So, for instance, like if you made a list of things that you were good enough to get paid for, right, there would probably be multiple things, right? You want that list to be very broad. It doesn't take much, right, to be able to get good enough, for instance, to do public speaking, or for instance, to be a mortgage coach, or for instance, to renovate properties and know how to manage a crew. It doesn't take that much to learn how to manage a team or, run a business, right? Those are all skills that you need to learn. What I don't like, okay, is people who say you need to have multiple sources of income who don't actually have businesses or enterprises other than maybe a handful of people. Because what you really haven't done is you haven't learned how to be a leader, and you haven't learned how to work with people in a large capacity. And that's a skill in itself. Once you get that skill down, for instance, where you can manage a company with 500 people, right, which is not, it's a Walmart, right? So it's not like, when you really think about it, there's hundreds of companies in this area that have employees with 300, 400, 500 people. They don't even know about it. They make steel, they make rivets, they make cups like this. I mean, you just don't even think about it. So until you get there to where you're a competent operator at an enterprise level, I would probably stick with one, but be very entrepreneurial in that one. Meaning, like, I would buy my own leads. I would take in leads from Hesh. Or from your company you're working with. I would have side projects and deals with real estate agents, or side projects and deals with people in title companies. I would do my own events, right, and things like that. Investing in that business and getting it to the point to where you have like a real team. You have people that are working. You have people that are reporting to you, and you've done that for a couple of years, because that's different. It's a different way of doing things. And then I would expand upon that, right? What I don't, and I like that, right? So 100% do that.
Build the foundation.
Build the foundation. I don't like the idea of like, well, I've got I'm doing some loans, and then I've got a coaching business.
Yeah.
And then I've got, I'm doing some personal training on the side for people who want me to do that. And then it's like you just have a lot of jobs, right? And they all produce income. But there's a difference between a job and having like a real enterprise. And so I tend to be a little more serious, right? Get an office, rent an office. Maybe just for you. Maybe it's your office. Doyle Enterprises, right? DiFranco and Associates, right?
Sounds pretty good,
right?
actually.
It sounds good, right?
Not bad, right?
And take it seriously within whatever vertical that you're having. And then at the same time, be like very open to ideas, be very open to everything, be very open to any opportunities that come your way, but make sure it aligns with what you're doing, right? And so one of the things that, I get calls by all kind of guys all the time about,
investing,
just different stuff that's going on. Should they buy this company or not? Should they do this or not? What's their opinion on this? Like other CEOs of the companies. And I always tell, look, if you have a good opportunity, the further you go on that opportunity, the more time you spend with that opportunity, the better it's going to get, right? So, for instance, if I decide, you know what? I really like you guys here. I'm going to spend the next week with Hesh and just a team here, right? Well, all of a sudden, spending a week with you guys, we would be doing all kind of fun stuff, right? We'd be wrestling. We'd be talking real estate. We would be, working out. We would get closer because we were already working together, but we would get closer because the opportunity is better. Let's say, for instance, I was at a tire manufacturer. I had nothing to do with real estate. I spent a week here. It would be a complete waste of time, right? I mean, what would happen? There's no business opportunity. Maybe there's a personal opportunity. That doesn't really make sense for a tire manufacturer to spend a week with a mortgage company.
No cohesiveness.
Right? There's no cohesiveness, right? And so if you think about these things that kind of come your way, are they adding to the core of your life, or are they just a distraction that sounds kind of fun?
Right.
And then what is the core of your life? Is the core of your life just you doing all the work? Or do you have the skill set and have you recruited a team? Have you spent a little money on some stuff on your own? Have you invested in yourself and your business on your own so that now when you're taking on this new enterprise, it adds to it, something that's already there, rather than it just being like some one-off business opportunity or some, just you want to
Have systems in place.
you want to take it
sense.
seriously.
Yeah.
Like I would say, like you want to take it seriously. You don't want. You want to throw all the hype and all the fun entrepreneurial, this is just going to go great and we're going to change the world, and say no, let's back up. What are we actually doing? We're actually manufacturing mortgages. We're actually helping people do this. We're actually doing that. We're going to get the best at that. Right? This whole change the world thing is a little over-exaggerated. But we can get really good at this, and by being really good at this, I can hire 100 people or 50 people. And by hiring 50 people or 100 people, now I have some staff, now I have some money, now I have some bandwidth. Now I could go out and start doing these little fun projects.
Okay. You got it.
You know what I mean?
So your advice would be, hey, get really, really good at your core, build the foundation, build the enterprise.
Become a professional.
Become a professional.
Be a pro.
Yeah. I would imagine you're stacking cash too at this point. And then once you kind of are the master there, then maybe you start branching off. Instead of, I'm at $100,000 a year. I'm not really the master at this yet. I'm still learning.
Yeah.
And I'm going to go buy a freaking duplex, or I'm going to go, start doing something else.
Right.
Yeah, because you're really, in the big scheme of things, if you went on a little trip, right, and drove around, another state, you would find that you're one of 100 other guys just like you, right? But there is a point to where that's no longer the case. So, for instance, if you look at 90% of the companies in the United States of America has less than 10 employees, right? So maybe it's 95% or something.
Say that stat again.
95% of companies in the United States have less than 10 employees.
Makes
right?
sense. Because
Right.
we're mostly small
businesses. Okay, so for instance, if you're talking about multiple income streams and stuff like that, you guys say, okay, well, do I have more than 10 employees? No. Okay, well, let's get there first, right? Let's go pro, right? Let's get out of the white belt and the simple stuff out of high school, right? Out of elementary school. Let's get out of college. Let's go pro. Let's have my own team. I've been running my own team. I got my own P&L responsibility for a couple months or maybe even a couple years. I've been through some wars. I've fought some wars. I know how to handle stuff. I know how to deal with stuff professionally, legally. I've had some lawsuits and stuff like that I know how to get ahead of stuff. And then now when I go into these scenarios, I'm not some, broke idealist, right? Or some up-and-coming idealist. I have some money to invest. I understand risk. I understand enterprise. I understand operations. I've been through some wars. I've had some tough conversations, and I'm in a much better position. I find a lot of people, similarly, we were talking about that guy making $100,000. I look at their resume. And it's like you've just moved, like you've done the same 3 years 10 times, right? Like you started as a VP of this company. You were there for 3 years. You did some sales stuff. You maybe took revenue from $500,000 to $1 million. Okay, cool. Then you quit. Then you got fired, and you just did the same thing over and over again. You've never stayed long enough and been serious enough or professional enough to make decisions long enough.
Yeah.
Does that make sense?
That's great advice,
100%.
honestly.
Yeah, 100%.
You know, it's, I would slow, you know, kind of like that. Yeah.
Yeah, I agree with that. That's a good point. That's a good point. Guys, how are we on time? Are we
We're at an hour and 10.
cool?
Oh, wow. That's a lot longer than I
oh,
thought.
good.
Cool.
Hey,
We
the
can go.
conversation
I'm
rolls.
good.
Yeah, I'm cool with it too. I want to, I guess, as we kind of, you know, like work towards wrapping up, I'm eager to hear your perspective and outlook as you talk about going through wars you've been through. Right, you went through. Right, you talk about how the appraisal management company took its toll and obviously went out around the crash. Right, 2008 stuff like that.
Well, yeah, we went out of business like 2 years ago. But yeah.
As far as going through that.
Oh, we went through the crash. Yeah.
As far as going through that,
yeah.
right? And like your company obviously experiencing that, you experiencing that too, and taking those experiences with you obviously in business. Taking obviously your business out of it, just looking at it as a market perspective right now, still being tied up in real estate companies. I hear a lot of people, and Chris, I'm sure you get this as well. You know, these people put their information on Zillow and Lending Tree, and they pick up the phone. They say, I'm going to wait till the market crashes. Right?
Yeah.
I'm going to wait for this huge recession. The bubble's going to burst. All these homes are just going to end up flopping 100K over, and everybody's going to be underwater. Why is 2008 in comparison to now in real estate, why are the two different? And what do you see moving forward?
Yeah, so a couple things, right? So 2000, I'm big on underlying stuff, right? We talked about that. What's behind the magic curtain, you know what I mean? So the problem with 2008, 2007 is there was a hyperinflated market, right? So you have a situation where the tools that were used for loans, whether it's pick a payment options or loan options, down payments programs that they had, plus the appraisal issue that they had, and there was a bigger issue then, were overinflated. So they would go, and the properties really weren't worth that. It's just the financing mechanisms that they had, whether it's 5-1 ARM or 7-1 ARM or negative amortization where you could just pay the interest, would allow stated income would allow those prices to keep rising. So that factor is not in the equation anymore because both the appraisal and the underwriting of the loan is a lot stricter.
So
right?
boil down bad loans is what you're saying.
Bad loans.
Early 2000 was bad loans.
Okay.
Bad finance.
What's contributing to the hype, the values going up, really are there's three factors. One is population trends, right? So you have the entire millennial population, people my age, your age, who are forming houses and going to purchase properties, and they're driving demand. Okay? You have really low interest rates, but then what you have is now we're going to a place where you have inflation, right? Inflation is interesting because inflation is kind of a secret neutralizer, right? Because as they release money into the market, you have in a situation where people have more money, right? So if they have more money, they're making more money. Interest rates are still low. They can afford to buy a house that's expensive.
Sure.
That is what I think is going to keep those three combination factors is going to keep prices relatively stable. Now, that doesn't mean that there's going to be a little bit of a lull, right? So next year I think there's going to be a little bit of a lull, but prices are still going to go up. And then for the next probably 8 years, I would say, 7-8 years, you're just going to have pretty consistent demand from the millennial population just interested in purchasing a house. So that are all the people who are buying, people like buying a house. Everyone, is probably pregnant and buying a house. You know what I mean? Just had a baby, pregnant, and buying a house. Yeah. That is what is going to push demand, probably for the next 6 to 10 years. And if you look back at the baby boomers, right? So the baby boomers in World War II, and what happened then. So HUD was established largely as a result of the baby boomer population coming home from World War II and had no more place to live, right? They couldn't get any loans. So most of your Cleveland suburb, most of your Washington, D.C. suburb, were built by HUD. These little 900 square foot, 3-bedroom, 2-bath. You know how you've been in 1,000. I've been in 1,000, right? I'm talking to Cape Cod, ranch style homes. That is one way they dealt with that, is just build more houses, right? And the government stepped up to that historically. But I don't think there's going to be any type of crash. And if anything, I would say you're going to see real estate in these kind of metropolitan areas and cities just get tighter and tighter and tighter. And then what you're going to see is sort of just a suburban sprawl, like kind of these people moving out into rural areas, similarly to what happened in the 1940s and stuff like that.
Makes sense.
Yeah.
Awesome.
Great. This was fun.
Yeah.
I learned a lot.
It was a lot of fun.
I honestly, I learned a lot. We're in this industry.
It went quick, man.
Yeah.
Felt like tunnel vision the whole time we were talking. I forgot there was like a whole...
Yeah, that's fine. It's good. It was really fun.
Yeah,
it was really fun.
It was. Chris, do you have a wrap-up question or anything at all?
Any other questions?
No, I mean, just one piece of advice. I mean, you've been an entrepreneur the majority of your life. And, for a lot of our viewers are, people business oriented, a lot of people who are going to want to start their own businesses one day.
Yeah.
One piece of advice you'd give them.
So it's not that complicated, right? So anyone who tries to make it complicated, it's not. Running a business is very simple. Running a big business is very simple. Running a small business is very simple. But it does require you to learn things. And those things are very specific. It's not enough to just want to. You need to know about accounting. You need to know about legal. You need to know about business plans. You need to know about business continuity. You need to know about management structure and hierarchy. You need to know about technology and implementation. You need to know about CRMs and lead sources. You need to know about marketing. There's a lot of broad stuff that you need to know. And once you know that, it becomes very simple. If you don't know that, and you don't have the right resources, you can find yourself very frustrated, very drifting, and really failing, not for any other reason, but just knowing some very simple things, right? And so I would say skip the fluff. Go get the hard books. Like skip all the motivation crap. Get that stuff from Instagram. Skip all the, honestly, the Grant Cardone kind of rah bullshit. Throw that away.
Yeah.
Get technical books on how to actually learn the inner workings of a business process, business process optimization, finance and accounting, legal for businesses, all those things that nobody else does. And you can get them for free at your local library, right? And study that for a year. Do that. I would say that would be.
That's where you start.
That's where I would go technical. Because what happens is everybody's good at the bullshit stuff. Everyone's good at following up and being cool about stuff. And then, okay, yeah, fine, I'll call you back, you call me back, text. Everyone's good at that. A lot of people don't even do that, but almost everyone's good at that. When you start talking like legal structure, contracts, accounting, finance, cash flow analysis, we start talking about lead acquisition costs and managing people and organizational charts. Most people don't even understand what you're talking about, right? And that's where business is done, right? Business is done there, and business is a skill. Yeah. So the same way that you would expect a good wrestler or a good MMA fighter to know those sort of techniques, not just go out and buy all the shirts and all the motivational posters about fighting and stuff like that, is the same thing when I see a lot of business guys. It's focus on the technical stuff. Get really good at that because it's an art. And when you see a good business, it is art. I mean, it's a real thing. And then go and see these other businesses in operation. One of the things I had the benefit of is when I traveled a lot, I went and saw every lender. So I've been inside every single lender's office, right? So it's you see how Loan Depot, Quicken, how all these companies run behind, and they always want to show you around, right? Kind of thing, behind the scenes, and that you can then replicate and learn. So go technical, skip the fluff, and then go and see the people. Get out of the office.
Very sound advice.
Great stuff. Hey, everyone. Thanks for tuning in to this episode of the Elevate Cleveland podcast. Dominic, wrap it up for us.
As Chris stated at the beginning of this podcast, we are licensed loan originators for the best mortgage company in the land. That is Liberty Home Mortgage. Guys, if you or anybody you know is looking to purchase or refinance a home, doesn't matter if you've done this 1, 10, or 100 times, call us, email us. The email is in the description below. Reach out to that email. In the subject line, put looking to purchase/refinance a home. Whatever it is your goal is, Chris and I will reach out to you within 24 hours, and we look forward to helping you with whatever it is your specific home goal is. Thank you. Brian, thank you so much for coming out.
That was awesome.
Yeah, we absolutely appreciate it. And as always, we ask that you just simply like, follow, subscribe. We are on all streaming platforms. Very important. Go to YouTube. Hit the subscribe button. We appreciate it. And, of course, share it with one person. We believe that if you share it with one person and they share it with another person, it can trickle down with the butterfly effect. You never know what advice somebody takes from something and how they implement into their life and ultimately how it ends up maybe changing the world or starting the next Amazon, right? So that's it, guys. We appreciate you tuning in as always. Episode 7, Brian Coester.
Thank you.